Hello and welcome to AI Market News by LM. Okay, so the stock market is absolutely on fire, hitting one record high after another. But here's the billion-dollar question. Are we witnessing a genuine, sustainable boom, or are we riding a massive AI-fueled bubble that's just waiting to pop? That's what we're digging into today. We're going to break down what's driving this incredible rally and expose the risks that might be hiding just under the surface.
I mean, just look at the headlines. They speak for themselves. Both the S&P 500 and the NASDAQ have just shattered their previous records, continuing what has been a truly remarkable recovery. The S&P 500 just blasted past that 7,000-point psychological barrier, a level that, let's be honest, felt like a distant dream just a few months ago. This isn't just a small gain, it's a historic move, and has the entire financial world talking.
So, what's the jet fuel in this rocket? Well, in our first section, we're going to look at the main force behind this surge. And no surprise here, it really all comes down to two letters, AI. Right now, the single most powerful story pushing the market higher is this intense, almost singular focus on artificial intelligence. It really feels like every little dip is being bought up, every rally is being chased, and it's all centered on this core belief that AI isn't just another tech trend. No, the thinking is that it's a fundamental, foundational technology, like the internet or even electricity, that is going to completely reshape the global economy. And this slide right here, this really gets to the heart of it, the ultimate stress test for all this AI optimism. All eyes are on TSMC. This is the company that makes the advanced high-powered chips that are absolutely essential for AI. Their next earnings report is being seen as this crucial barometer for the health of the entire AI ecosystem. And as we can see, analysts are forecasting a massive, and I mean massive, 50% jump in net income. If TSMC also raises its full-year guidance, well, that would send a powerful signal that this AI boom has some real sustainable legs. And if you want to know just how wild the AI narrative has gotten, get this. Allbirds, a company we all know for its shoes, saw its stock price explode by over 400% in a single day. Why? Because it sold off its shoe business and announced it was pivoting to become an AI company. This is so important because it's classic speculative behavior. It feels a lot like the dot-com era, where just adding .com to your company name sent the stock to the moon. It's a sign that maybe, just maybe, hype is playing a bigger role here than fundamentals. Okay, let's move on to our next section and see how this all fits together. Because, while AI is definitely the star of the show, it's not the only thing happening. There are a couple of other really key factors that are helping to build this wall of optimism and push the markets even higher. A pretty big piece of the puzzle is a little bit of geopolitical good news. We're hearing from sources that the US and Iran are thinking about extending their truce. Now, this has really lowered the temperature on the world stage, it's reduced a lot of anxiety in the markets, and it's encouraged investors to start moving back into riskier assets, like stocks. And on top of that, we're actually seeing some real fundamental strength. The earnings season has kicked off on a really positive note. Major banks like Bank of America and Morgan Stanley have posted results that beat Wall Street's expectations, and they were fueled by strong trading revenues. So this corporate resilience is providing a really solid foundation for all the bullish sentiment out there. But of course, with every great party comes that little worry about the hangover. So in this next section, we have to face the big, uncomfortable question that's just looming over these record highs. Is this a bubble? It's the question we just have to ask, right? With so much good news already baked into the price, from AI breakthroughs to geopolitical calm, has investor enthusiasm just completely outpaced reality? Is this market being driven by solid fundamentals, or is it just a fear of missing out? And here is our first major red flag. CNN's Fear and Greed Index, which is a pretty well-respected sentiment indicator, is currently flashing extreme greed. Now, historically, when this index hits levels this high, it often acts as a contrarian signal. It suggests that the market might be due for a pullback. It's really a classic warning that all this euphoria might be reaching a tipping point. And this is so crucial. This rally isn't lifting all boats. As the slide shows, we're seeing a really significant split in the market. While the tech-heavy NASDAQ is soaring, the more traditional Dow Jones is actually lagging behind. In fact, on a recent record-setting day, about half of the stocks in the S&P 500 were actually down. What that tells us is that the rally is narrow. It's concentrated in just a few giant tech and AI names.
And finally, we have a dose of caution coming from the Federal Reserve itself. The latest Beige Book report, which is basically their collection of economic stories from across the country, highlights that rising energy costs are becoming a major source of uncertainty for businesses. This hints that inflationary pressures could complicate the economic picture and potentially put a damper on future growth. So, with this complex picture, you've got AI optimism on one side and these underlying economic risks on the other. Where do we go from here? In our final section, we'll look at some key things that we should all be watching to see how this story plays out. Over in the currency markets, we're seeing two key stories unfold. The euro is holding pretty steady against the dollar as investors are basically just waiting for policy signals from the European Central Bank. But the real action is with the Japanese yen. It's very weak against the dollar because of that wide gap in interest rates, and this weakness has Japan's finance ministry on high alert for a potential intervention, which could cause some serious ripples across global markets. Now, looking ahead at the economic calendar for April 16th, courtesy of investing.com, there are a few key data points on our radar. We'll be getting fresh numbers on jobless claims, manufacturing, and industrial production. These releases are going to give us a much clearer picture of the health of the U.S. economy, and they could definitely influence where the market goes next. Which brings us right back to our central question. Is this record run sustainable, or is it just a classic case of misplaced exuberance? It really feels like the market is running on two parallel tracks. You've got this high-speed AI express train, and then you have a local train just chugging along with all the real-world economic concerns. Only time is going to tell which one of them reaches its destination first. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.